Alright guys, Carlton here, and this is the first of many videos teaching you the basics of trading cryptocurrencies using technical analysis on Binance. This is specifically for beginners, for people that are just getting started. The reason why I choose Binance for beginners, Binance is a cryptocurrency trading exchange. And the companies that they allow to be traded, the currencies that they allow to be traded on their platform are all pretty good. They don't let any garbage pumped up coins be a part of their trading platform. They have to have some amount of basic fundamental value. It has to be a real coin that has a real use before they'll allow them to come on this platform to be traded. So that's why I like Binance for beginners. It's pretty safe. You're not going to get into something that is here one day and it's gone on the next. So we're starting out with IOST, and this is a coin that I bought a month ago and then I purchased again last night. I doubled down. Well, actually I quadrupled down, but let me tell you what had happened. Before, over here in the old days, when it first came out, it was way up here. It started out at $2.35, and it was at an ICO, or initial coin offering. That's when it started. You never buy an ICO ever, because they plummet. As soon as they come out, they go down. So this thing went from $2.35 down to like 3 cents, and then it started to build from there. So I bought in at 9 cents, and then it peaked at around, excuse me. Okay, that's a reminder. That's Alexa talking to me there. All right. Well, anyway, I bought in at 9 cents, and then shut up, Alexa. I heard you. All right. So anyway, I bought in at 9 cents, and it peaked at 15, and then it went down during the bear market in January, back down to 3 cents. But that's no big deal. I decided to buy back in, and here's why. I'm going to give you the basics of what told me on this chart to quadruple down and get another pile of IOST. IOST, that's the symbol, okay? Just like stocks, except it's a cryptocurrency. First of all, it starts to do this little action down here, and we see these triangles. And when you make a baseline out of the bottom price, like let's call this a baseline, and then we're going to compare the price that's running up above that baseline, and then it falls into distribution. Well, when it gets to this point, and then you connect the high point, you can make you a nice little triangle like this. And so before we get to these triangle formations, I'm going to talk about these squiggly blue lines. That's the Bollinger Bands. Some people say Bollinger, but I think that's wrong. The Bollinger Bands, it's kind of a statistical calculation that measures the volatility of a coin or a stock or whatever. And this is the average line here. And then we have 2 or 3 standard deviations above and below that line. And at any rate, whenever the Bollinger Bands get real tight and narrow like here, there's a chance where it will break out, especially when it violates that top line. So we can see a little run up, and then it rides up, pokes through the top of this line, and after it really pokes through, it jumps back down towards the middle. Sometimes it'll go below. So then we see it rode up on the top of the line there, starts to go back down towards the middle, and then it touched the bottom, and then it went back to the middle, violates the top, so on and so forth. So each time that it breaks out, volatility is higher, and then the lines get ballooned out. But whenever you see a tight line from here to here, that's when you know that it's going to break out up or down. Now, on this first triangle, we see that the price kind of went down. It fooled us before it went up. Now, over here, there was another triangle, and the price went down. I don't trade cryptocurrencies or stocks in bear markets. I don't recommend that. A bear market is when the overall trend is going down overall and not up. A bull market is when the overall trend is up. We see from this point to this point an overall up trend. Now, let's go along here and look at some of these triangles. After this happened, it went up just a little bit. Price didn't change much, and I'll show you how the price is done. It says 0.000044, and that's in terms of Ethereum, because this is purchased and traded on the Ethereum network. That means that you have to take the current price of Ethereum, which is $9.75, and multiply it by the number that you see here, and that equals 0.03 right here, that bottom price. Okay, so now look what happened here. We had a spike up, and then here's the point where it calms down. So let's make 3 points, and we have another triangle, or a pennant. Some people like to call it a pennant. Then it settles down, Bollinger Bands tighten, then it blows up again. From here to here, and there's the high point. Well, there's another nice little pennant. And then it did it again. It breaks out, we have a high point, it comes back down. So we can make another nice little pennant. I tell you what happened. When I was looking at this very closely, I had originally bought 1,500 coins. I don't remember how much I had spent on that. Maybe, $50, somewhere around there. That was my initial purchase, right? And so after this pennant, I was like, not convinced. After this one, I thought, oh boy. After this one, when we got to here, I decided to buy. And this was at 0.04. Okay? The reason why I did was this. When early on you see a big spike in the volume, this is the volume chart. The green bars is buying, the red bars is majority selling. Whenever the volume goes from nothing to boom like that, you know something's going on, that there's a breakout coming. Then it settles down again. Before it gets big, it's time to buy in. So I bought in right here at 0.04. Now, at the end of this triangle, we had a very nice run here, and now it's at 0.05. And it's probably going to continue to trend upward. And my goal is to sell out at 0.30, and it's probably going to hit 50 cents eventually, but I'm going to just unload it before the next downtrend. My goal is 5x, 5 times my money, and then I'm pulling out. I'm not going to be a hog. All right, now, something else that we see here is a formation called an Elliott Wave. Elliott Waves are just like waves in the ocean. They come in patterns. When you're out there boogie boarding in the ocean, a wave comes in, and then it gets bigger, then bigger, then bigger, than a huge one. And then it settles down for a while. That's what Elliott Waves do. And when you look at Elliott Wave theory, which was created by a man, I think it was 1913, when he was analyzing the stock market, and he noticed that because of the emotions of human beings, we see statistical patterns that form. And waves happen when people rush in to buy and panic sell a little bit, then rush in to buy again, then panic sell, rush in to buy one more time, and then it does a pattern after this Elliott Wave is over. So on the up wave, we have points. We start here. This is 0.1. Then we have a little bit of consolidation, and we go down a little bit to 0.2. Then there's a major run up. You see that right here. Huge run up to the peak right here. That's number 3. After the major run up, it's going to correct to number 4. And then we have one more run up to 5. That's the last hurrah. There you go. After that, there's going to be an ABC correction. First correction at the low point is A. Then it's going to come up, and notice that this high is not as high as number 5. That's a B correction in the Elliott Wave. Then it's going to go down here. There's going to be a C down here. Then it's going to take another major run. So that's very telling. Okay, now come down here to the bottom. The last couple things that we see is this squiggly little line here. This is called the exponential moving average. The purple line is the fast moving average, a 5-day average. The gold line, I believe, is the 13. It's probably the 13-day, and so it's a slower moving average. And whenever the fast one crosses over the slow one, at this point, whenever you see a crossover, something's going on. And then the MACD is when we take these purchases and then we take the sells, and we have a zero axis line here. It goes up and down, above and below this axis. Notice that whenever there's a run up, we have green bars. Whenever we have distribution, it floats down and we're in the red. And so then when it crosses over, something's about to happen. And sure enough, it did. Another run up. After this distribution, it goes down into the light purple there. And then on the run up, there's another green. So each one coincides with this bump down here. Now, whenever you see this crossover point, you know that it's reversing trend right there. There's the crossover right there. And then we know that we've hit the depth of a correction when it's down here, okay? And then we have another uptrend that pushes the MACD up into the green. Now notice how big this one is we have a big bounce in the volume. So we had all these triangles, and then the big run up was here. The big volume comes to push it way up there, okay? And then we know that with as high up as we were on the MACD here, and then we have a crossover, there's that last correction, and then the last run up, boom, right there. And we see the little bitty green here on the last hurrah to number 5, and then it runs down into the red. So that's how I decided to buy right here at 0.04, and I got another, I think it was 5,000 coins. And so now my average price after getting in at 9 cents on these 1500, and then I bought the rest here at 4. So do the math. Average is maybe 5.5, somewhere around there. And so I want to run that to 30, and then I'm going to jump out. So that is IOST. That's your simple technical analysis, how you can read these triangles in an up trend in a bull market where your general trend is upwards. Okay, very easy to do. It's a lot harder to do this when the market is going down, but you can still make money when the market's going down, but we'll do that in another video. So there we have it, video number 1, the basics of trading cryptocurrency on the Binance platform during a bull market. And last but not least, I am not a financial advisor. This is for entertainment purposes only. Study your cryptos before you make any buying decisions. And if you need professional help, talk to a financial advisor. And we'll see you in the next video. See ya.